Today, I want to talk to you about the concepts of index and ETF. We watch the index every trading day, but do you know how the index is calculated? Some of you don't know. So today, I want to introduce index and ETF. In the American security market, there are more than 10,000 stocks. How to evaluate the high and low, good and bad of the market? There must be a quantitative value. This led to the market index. The common indexes in the United States are S&P 500, Dow Jones Industrial Index, and NASDAQ Composite Index. S&P 500 is a company which selects the 500 companies with the largest market capitalization among all listed companies in the U.S. stock market. Then add their market value together to calculate number. This number is too large. By the end of 2021, it exceeded $13 trillion. The company divides this number by a number called divisor. Reduce 13 trillion to nearly 4,000. Therefore, the S&P 500 index is the most representative of the U.S. stock market. The Dow Jones Industrial Average has only 30 constituent stock. Unlike the S&P 500 index, the Dow Jones Industrial Average is calculated using stock prices. The two indexes have their own purposes, advantages and disadvantages. NASDAQ is a stock exchange. New York has the largest and the second largest stock exchange in the world. The first is the New York Stock Exchange. The second largest is the NASDAQ Stock Exchange. Like the S&P 500, the NASDAQ index is calculated by market value. But it is biased towards technology company. The main criterion to measure fund managers is whether their return on investment outperforms the index. Generally, the S&P 500 index is used as the benchmark for the return on investment. You can't buy index directly, but you can buy index fund ETF. Index fund managers buy all constituent stocks. Its advantage is that you don't need to analyze the stocks anymore. This saves a lot of time. Mr. Buffett once said that there are 1,000 stocks in front of him, but he only needed to look at 50. If you buy stock index fund, you don't even need to look at a single stock. You don't have to worry about the suspension or delisting of your stock. Although you don't need to focus on a single stock, you still need to focus on the Fed's monetary policy, unemployment rate, major international events, CPI, and other data. Of course, people who buy stocks also look at these data. There are many indexes fund ETFs. I only focus on index funds with the largest trading volume. Because the transaction volume is large, it represents good liquidity. The most important thing for investors is to prevent risks. Investment is accompanied by a lifetime. Before you invest, you should consider the following factors. First, whose account is your money in? Is it in the account of a broker company or in your own bank account? That's a big difference. Any company can go bankrupt or cheat. If your money is in the broker's account, it means that the broker has the initiative. When receiving your withdrawal request, it can pay you or not. Of course, you think the broker company will definitely pay you. However, in many countries, broker companies ever stolen customers' money. In years, if this happens once, your life will be destroyed. Are you willing to take the risk? Although the bank is also a company, you can see the financial reports of the bank. Big banks earn billions of dollars a year. Its reputation and security are higher than those of broker companies. Second, is it possible for the stocks you bought to be delisted? Many people try their best to find possible star stocks from more than 10,000 stocks. However, it is impossible in practice. Your time is limited. You can't watch more stocks than Buffett. There is often such a scenario. He skillfully operates the computer and finds a star stock from many stocks in some movies or TV episodes. Then he made a fortune. In fact, this kind of situation only appears in movies and TV episodes. The daily trading volume of most stocks is very low. This means lack of liquidity. The capital of the protagonist's operation is as high as hundreds of millions of dollars. It is difficult for him to buy unpopular stocks. With only a few $1,000,000, the stock soared. ETFs with high turnover are SPY, DIA, QQQ. Many investors want to buy stocks than ETF because stocks may rise more than the index. If you think these ETFs is slow, you can buy QQQ with triple leverage. It rose more than most stocks. From March 2020 to November 2021, QQQ increased by 1,100%. How many stocks can achieve the same increase in the same period? Perhaps because of the above reasons, Buffett also recommends buying index fund ETF. Index fund ETFs are more interesting than most people think. I will introduce some interesting funds in the future.